Welcome back to Wall Street Silver. We have today John Miniotis from AbraSilver. How are you doing today, John?
Doing very well. Thank you, Jim. Thanks for having me back.
I wanted to talk with you. You've been one of the more popular silver exploration companies out there on Twitter that I follow. Everyone's always talking about, a handful of companies, and AbraSilver is always one of them. But I wanted to ask you yourself, what's your own personal investment strategy in terms of the silver gold space?
Definitely, the two are not mutually exclusive. So I own all. So I own some physical silver. I own quite a lot of PSLV as well, which is just a lot more liquid form of owning physical silver, obviously, through the Sprott Trust there. But yeah, the vast majority of my positions are within AbraSilver. So, and yeah, no, I think, you really can't go wrong either way. I mean, it's a different risk, totally different risk profile. But I think without a doubt, sort of in my career, which is now 17 years in the mining industry, I've never personally come across a moment where I truly think the setup for owning silver in whatever form is more attractive than it is right now. I mean, I think, as your viewers know, I think investment demand for silver is through the roof. Industrial demand is up nicely as well. But, importantly, I think there's a clear lack of new supply of projects. And so, importantly, I mean, we have one of the very few primary silver projects that can enter production in the next 3 years or so. So there's almost inevitably going to be a silver shortage here. And so, I think investors can expect very good returns from either owning physical silver or shares in a primary silver company like AbraSilver. So it truly depends, in my opinion, on your risk profile, risk tolerance, and definitely knowledge of the sector. I mean, it's
what are the ways? I used to trade options, but my timing always stinks when I trade options. I'm always either, I'm typically too early, so I lose money on time decay. And the way this has been described to me when I look at, juniors or exploration companies specifically, is it's an option on silver or gold that doesn't expire. Those ounces in the ground that you guys have explored, that drilled for and proven that exists there, it's a resource, and that resource has value. And one of the ways that the exploration companies, obviously you're not a producing company, but your types of company, they build value through the drill bit. They build value by proving the resources there. And one of the reasons why AbraSilver's done so well is the drilling results, obviously. It's not necessarily the silver's gone up from below $20 an ounce to now it's a little bit over $28 an ounce today. But proportionally, what has AbraSilver done in that same amount of time?
Yeah, that's a great point. I think there's no doubt. I mean, the highest returns are always generated by investing in the exploration space, which is fortunately where we're in. But of course, that's if you pick the right company.
Yeah,
but yeah, no, in terms of returns, I mean, since the beginning of 2020, so a year and a half now, that's when we got involved sort of with Abra. The price of silver has gone from 18 to essentially over $28 today. So 55% return, call it. But yeah, Abra, that same period, has gone from 5 cents to 65 cents. So well north of 1,000% return. So we're outperforming the silver price by 20 times. And so clearly, investing in exploration companies can be higher risk for sure. There's no question. But clearly offers potential for much higher returns than just buying physical.
The highest risk exploration companies are the ones that they just have a land package and it's pre-discovery, right? But that's not the stage that Abra's in. At this point, you guys have proven the resources there, and it's more about defining the resource through additional drilling and then coming up with a resource estimate. And that's why Abra, I guess, has jumped by over 1,000% in the past 2 years, simply from the proving and the continued drill results. Speaking of which, you guys had some drill results today that we're going to share. This has already been announced publicly this morning, but I wanted to get this out there. Walk us through this, John. What are the key highlights that you want us that we should be focusing on for AbraSilver here?
Yeah, no, so I'd say, we're very thankful. I mean, our exploration team's just doing a phenomenal job for us. And so we're consistently hitting very high grade material over excellent widths, very important to note that, close to surface in oxides. So this is really an ideal scenario. I mean, there's really not much more you could possibly ask for. So our deposit, I mean, includes a very high grade silver and gold zone, which we call the Tesoro zone. And we've already announced several world-class intercepts from that portion. But today, again, we announced another couple holes here. One, hole 14, I guess, was on the western edge of the Tesoro zone. The other was on the eastern, beyond actually the eastern boundary of that zone. So those were holes 14 and 15 that you can see on your screen. And both intersected very high-grade mineralization. Again, high-grade gold, again, shallow, close to surface, within oxides. And so, I think it just continues to show that we're very fortunate here, consistently coming out with high grade results. So we expect, this is going to result in high margin ounces being added here when we come out with our updated resource statement next quarter.
These are very thick intervals. I'm used to, when I see drilling results from a lot of companies, they're highlighting like, hey, 5 meters here or 10 meters there. And I guess that's typically underground type of vein mining, but this is open pit mining, very thick, lots of material, potentially very profitable, very cheap to actually mine blocks like this, correct?
Yeah, no, absolutely. And again, I mean, it's not just one release here that we've had. I mean, we've been announcing results continuously for every 2 weeks, pretty much on average, for several months. And so in total, I think we've announced now 48 holes from our phase 1 program. It's important to note, I mean, 90% of those holes have intersected grades above the current resource grades, over, again, significant widths within oxides, close to surface. So it's, we're not just adding incremental ounces here and just growing this. I mean, we're adding high margin ounces, which should be very highly economic. And so, we're extremely, extremely pleased and definitely looking forward to the updated resource estimate coming out with updated economics, which is now just next quarter. So in Q3, we'll be announcing those. And I think that could definitely be an eye opener, I think, for anyone who has been paying attention to all these press releases here.
So the previous resource was 140 million, and that was from 2018, was it?
Correct.
So
yeah.
What we're waiting for in the third quarter will be an update of that, and hopefully a big update based on all the new drilling results you've been announcing over the past 6 to 12 months, correct?
That's right. Yeah, and it's not just the resource. So the resource will be announced, but importantly, it's the economics around the resource again.
Yes.
And so I think that's what's important again is we're adding high margin ounces. I mean at current spot prices alone. So at today's commodity prices, if you use the economics from the previous study, just adjust the commodity prices only, don't adjust the size of the resource, which has grown. But Abra, so the net present value of this project is about $1.70 per share. And we're trading at a significant discount to that. So we think, well, obviously we have a lot of catching up to do just to get to that value, let alone the value of what we expect is going to be coming here in Q3, which is going to be based on the expanded resource with improved economics. And so we're extremely, extremely keen on delivering that economic study to the market as soon as we can.
So, John, currently, what was the price of silver back in 2018 when the previous resource update was done? Silver was below 20 at the time, correct?
Correct. But for the study itself, that had assumed a commodity price of $20 silver and only $1,300 gold. So those were the base case prices used in the 2018 study. Of course, very, very conservative compared to what we have today.
So what would the new one use? I mean, you have to be conservative with these things. I don't think any of them ever used the current silver price, but I've started to see some other producing mining companies start using $1,500 gold in their estimates. What would be a conservative number to still use for the upcoming resource update?
Yeah, so we haven't finalized the specific number, but for sure there'll be a sensitivity. So I think we'll continue to show it at very conservative commodity price assumptions. That won't be the base case, but we can continue to use $20 silver, $1,300 gold as a downside price scenario. And importantly, the economics here, even under that price scenario, were over 30% after-tax rate of return. So your IRR, because of the high grade nature of this project, you still get very good economics, even at much lower commodity prices. But yeah, we can go up to, with a range, and showing again current commodity prices, which are $28 silver, $1,900 gold. Clearly the economics improve materially. And so again, going back to our previous conversation in terms of why would you buy an exploration company versus just physical silver? I mean, as an example there, of course, if you buy physical silver and gold today and commodity prices double, you have 100% return. But for us, I ran the economics just the other day when I was speaking with an investor. At current prices, I mentioned the net asset value of this project is about $1.70 per share. But if you double the prices, the economics don't double. They go up. It's almost $5 per share of value here. So you go from $1.70 to, I believe, $4.80 or so at current, or at double commodity prices. So you get that torque to rising silver and gold prices, and importantly with us as well, as I mentioned, even in a downside price environment, this is still a highly economic project. So you kind of get best of both worlds if you're able to find sort of the right project.
Well, thanks for the update, John. We really appreciate it, and I'll definitely contact you. Our next drilling results are out, and hopefully we can get a lot more of the same.
Excellent. Thanks very much. Always appreciate it to be on, and